Hello, Oracles. Well, Tesla just released their 2022 Q4 earnings. As Elon said, they had the best year ever on every level. So, in a minute, we are going to dive into all the numbers, where they came in based upon estimates, and what they said on the earnings call, and what we can look forward to in 2023 and beyond. All right, so as Open Skies shares here, Tesla Q4 earnings beating analyst expectations. EPS non-GAAP $1.19 versus $1.10 estimated. EPS GAAP $1.07 versus 98 cents estimated. Revenue 24.318 billion versus 23.6 billion estimated. Automotive gross margins 25.9% versus 26.4% estimated. So a slight miss on the gross margins, and 3.687 gap net income. And so Tesla also said that they came in with just over $7.5 billion of free cash flow in 2022 and now have over $22 billion in cash and cash equivalents. So they are still sitting on this giant stockpile of cash. Now, as they said, they are still preparing for what could potentially be a deep recession. So they hope that this does not happen, but they want to be prepared for this. So they have this $22 billion in cash sitting around, just waiting to see what is going to happen in the market this year. Now, some awesome things that we saw this time around were, usually for the last 2 to 3 years, they've just given us this 50% average annualized growth over the next 10 years, and that's what their forecast and guidance was. This time, for the first time ever, they have given us a specific number. They gave us 1.8 million vehicles for production that they are looking for in 2023. They also feel like they are going to be selling every one of these vehicles. So, when we are looking at these numbers, Elon did come out and say that they do have enough supplies and they do have enough demand to be able to move 2 million vehicles. But with all the headwinds that we faced last year, all the different black swan events that we had, they want to give themselves a little bit of a cushion because if in case one of those things comes up, they want to make sure that they are prepared for that as well. So, if we end up going through this year and we don't have any of those black swan events that come out, there is a chance that Tesla might potentially hit 2 million vehicles produced this year. Now, for the year, Tesla also came in at nearly 17% operating margins. Now, this is something that we have talked about as well. Their operating margins are the best in the industry. And when we were talking about vehicle margins, they mentioned this specifically on the call about the fact that their focus is now on operating margins. That is what ends up driving the business forward. That is what is paying all of the bills is your operating income. It's not strictly just your vehicle profits. So, yes, even if they take a hit on vehicle margins, their operating margin will be going up. And this was shown very well in this chart here, where you can see their gap operating margin continues to climb up near that 18%. Meanwhile, their average selling price of their vehicles has been coming down. Now, we are seeing obviously a much lower price going on right now for Q1. So, this is where we're going to pay attention to the Q1 operating margins because as we see, they are climbing up. And even though average selling price is coming down, they still are getting more money on the bottom line. And again, they said that this is going to be their focus is just looking at doing whatever they can do to cut those expenses on the bottom line, become more efficient with manufacturing, and then be able to have even more money on the bottom line. And so to quickly run through some of the notes that they had in the earnings call. So the first thing they addressed was the demand concern. Elon jumped in immediately and just said, January has seen the strongest order flow year to date ever in their history. Their orders are twice the rate of production. So right now, orders are coming in twice as fast as they can produce. And we know that they have been ramping up production significantly. So that is a giant number. So there's a vast number of people who want to buy their cars, but can't afford them. This was one of the reasons why they came down on their pricing. They also mentioned the EV tax credit. And this isn't something that they just want to take the money and put it in their back pocket. They want to pass this along to the consumers. More people want to buy their vehicles, they now have this $7,500 buffer that they can offer to consumers to be able to bring that price down and allow more people to get into their vehicles. Now, as we had spoken as well, Elon came out and said there are some very astute retail investors that are out there that are saying exactly this truth, which is the more vehicles that are out there, the more people there are who could potentially be buying software and FSD in the future. This is significant because it's basically 100% profits that they are getting from this software in FSD. So if they have a vehicle out there, even if they don't collect FSD right now, that consumer down the road may choose to end up getting FSD. That then will be more money coming in. And as we spoke on here before, that could just be delayed profits and delayed margins. So even if their vehicle margins do come down a little bit, they can make up for that in the future with 100% margin software. And one thing that we also noticed on the call was Elon just sounded tired. And we know that he had quite a busy week. He was in court, and then he was over in Nevada doing the presentation for the new Gigafactory expansion over there. And then he said he was with his AI team doing a whole lot of work with them, and then the earnings call. So I mean, the guy's a busy guy. So it's totally understandable that he sounded tired, but he gave us some great information either way. So they did mention that the 4680s, they confirmed that yes, they were at 1,000 battery packs per week at the end of last year, and they're looking to continue ramping that this year, but they will be using other cell providers to get these batteries also. They also said with the EV tax credit, they are actually splitting that battery credit with Panasonic. So Panasonic is getting half, and Tesla will also get half. And Zach broke down when it comes to the actual amount that they're going to be getting from this. 2023 might not be as big of a year, but going into the future, they are looking at potentially $150 to $200 million in credits coming to them from all of these incentives from the EV tax credit. And then they started getting into the retail questions, which, we discussed many of them on here, and they actually dove a little bit deeper into some of them than I thought that they would. So when somebody asked about what the margins are, seeing as people are expecting average selling price to come down to $47,000 this year, which is what my forecast is as well. And they said, and the margins, potentially falling under 20%, excluding the regulatory credits. Zach came in and said, well, based upon the numbers that we have run for this year, average selling price should be above $47,000 and they will be above 20% margins. So this is a great sign here. I had a forecast of 24% margins this year. So, maybe they'll fall in line with that. But again, Zach did reiterate that it's the operating margins that they are really focused on this year. So as long as they can make sure that operating margins are going up, they will make sure that that happens. And it doesn't matter if they have to bring the pricing down, because again, they want to get more people into their vehicles as that is their focus. And when asked about the ramp of the 4680s and where they're going to be getting at there, when they were going to be getting to that 10,000 battery packs per week, they said that they said that right now they are only operating one of the 4 lines down in Texas. And so they still have those 3 lines to get up and running. They again are still using other manufacturers for these cells. And their goal is to get the ramp up to pace for when the Cybertruck comes out to make it a cost-effective ramp for when the Cybertruck lands. Now, they did get into the Cybertruck as well. And they mentioned that the Cybertruck is, with anything, production in the beginning is going to be slow. We saw that with Berlin and Austin this past year in 2022. So we know that when the Cybertruck starts, ramp is going to be slow. Does sound like there's a little bit more of a delay. Originally, we thought that we would see volume production by the end of this year. Elon came out and said that volume production will be 2024. So it looks like 2024 is going to be the year for the 4680 and the Cybertruck. That will be the 2 main things that we can really focus on as far as volume production goes in 2024. They were also asked about Tesla insurance and when we would see that be actually, a reasonable number on the bottom line and actually make some sort of significance. And Zach said that's not really the focus of insurance. It's going to take a long time for it to get to that point. The most important thing about the insurance is to be able to bring down the overall cost of the ownership of the vehicle for consumers, because now they could pay less for insurance. And as Elon alluded to, they get this immediate feedback from any accidents that the vehicles get into. And this way they can speed up the repair of the vehicle so the owner can get their vehicle back sooner. And they've also learned from this how they can actually change the design of the vehicles themselves to make repairs go even faster as well. So having this all vertical integration here is just, again, helping Tesla become even better and more efficient and being a better product for the consumer as well. They were also asked about megapack factories and when they would be coming out with new factories in other areas and what their strategy is going to be for what areas to put them in. Elon said that's something they are definitely thinking heavily on as to where they're going to put these. There's a lot of different logistics that have to get played into this, and they're not ready to disclose all of that information yet as they are still discussing it. But we know that energy is ramping up significantly. They did say that energy is ramping faster than vehicles are right now. And so if we look here at this chart, energy storage developments, look at this. I mean, this is the start of this S curve. This is what's going up. So this is where we saw vehicles were at just 3 years ago. So this is that ramp. And then here's your superchargers also on an S curve going up. So yes, we have energy coming and it's coming in strong. So this is why their focus on megapacks is so significant. They did say that they do have enough batteries. They are not cell constrained whatsoever. And if they do have excess on top of what they need for all of their vehicles and battery storage, any excess will go further into battery storage for Powerwalls and Megapacks. We know that Megapacks are sold out through the summer of 2024, so they're going to need as many cells as possible for that to continue ramping on those Megapacks. And Elon did reiterate that the roadmap for their products is the most exciting roadmap of any company out there right now. And so then somebody asked, well, with the 4680s coming up for the semi, what other vehicles in the commercial space could potentially be using the 4680s? Elon, of course, did not say that they were going to divulge any of that information, but yes, they are working on other commercial vehicles that could take these 4680 cells. And then someone also asked at the end, asking about that $25,000 car and if they were going to jump into that. Now, he did word the question very well and say, hey, I don't want to steal any thunder from Investor Day, but can you give us this information? And honestly, it was a great exchange because Elon said, hey, if I were you, I would have asked the same question, but I cannot divulge any of that information right now. We will just have to wait and we will explain all of that in due time. They were also asked about the take rate on FSD. They said that the take rate is trending up at the moment. And as we go over time, obviously, as they build it up more, they will have more people who come in. And again, going back to more vehicles on the road, more consumers and customers available to purchase FSD. So this will continue to grow. And they said that by the end of this year, they'll be looking at having Dojo coming in to really start pushing things along even faster. And then when they were also asked about, the new roadmap and the new vehicles and products that they are going to be coming out with, didn't really ask specifically about why they were delayed, but Elon just kind of jumped right to it and said, look, just like we said 2 years ago when they were supply constrained, they are looking at, limited supplies of materials like lithium, which is why they're getting into lithium refining to make sure that they can get all of their vehicles out. It does not make sense to put out a new vehicle, especially something that's going to be a lower price vehicle, which is going to sell significantly more units when they don't have enough resources available to expand on what they currently have. So, stealing from one area to put it into another does not make any logical and efficient sense. It actually slows them down and it actually becomes more expensive. So right now, this is the smartest plan for them to go on. Is just allocate their resources accordingly to their current lineup and then keep on pushing it from there. When they get to a point where they have more abundance of these supplies, then they can come out with even more vehicles and a bigger lineup. So we will hear about these things in due time, but we just need these supplies to really start building up and have these materials be more abundant. They were also asked about who their chief competitors are and who they think their chief competitors will be in 5 years. As Elon said, especially when it comes to AI and FSD, they can't even see second place with a telescope. But when it comes to the actual competition, looks like, China is definitely something that is on their radar. The Chinese manufacturers are doing very good things that are over there. And so when it comes to competition, China is going to be most likely the second place ones, and they're going to be a very strong competition. Now, as Elon has also said in the past, competition is good. You want to have competition because this is what helps you continue to innovate. If you don't have anybody helping you change, you're not going to change. You're going to just stay status quo and you're not going to make anything more exciting and you're going to get bland and stale. So having this competition is a good thing, but as of right now, nobody is really giving them that competition, and Tesla China is leading the way over there in China as well. And this morning, I did jump into the 8K that they filed as well, and it looks like they've entered into a credit agreement with Deutsche Bank for about $5 billion with the ability to increase it by up to $2 billion. So this will expire in January of 2028, and this can be used for whatever they need to for business purposes. part of me wonders if this is something that they are utilizing for maybe a buyback for this year, or if this is just they're looking at doing some other sort of capex spending that they want to have this money on the sidelines for, just in case we go into this deeper recession. So they did say that they did not want to get into any sort of loans and things like that, especially going into a recession with these high interest rates. So having this here, I'm not sure what they're going to be using it for. They did not disclose any of that on the call, but it'll be nice to hear about what they are potentially going to be using it for, whether it's going to be for a new gigafactory, whether it's going to be just to make sure that they have the cash that they need, even though they have $22 billion in cash on the side, whether it's going to be for a buyback. If you guys have any thoughts about that, you can share in the comments below. Maybe they did say it and I missed it. There's a lot of times you miss things on the call for the first time, and I haven't had a chance to go back and listen to it again. So if you guys know anything about that, please share in the comments. And so overall, I thought it was a great earnings. They didn't really smash numbers, but they definitely beat most of their numbers that they were looking at. And they gave us very good guidance for the future as well, with even more clarity than we normally get from them. And after earnings dropped, the stock price didn't really move much, but after the call, it did. And as of right now, pre-market, we are looking at Tesla being up over 7% to almost $155. So as I told you guys yesterday, I was going to be waiting on earnings, and if we ran, I was going to sell 3 shares in my IRA. What I ended up doing was not selling because we didn't end up running up any further. And so this morning, I put in a trailing stop for 3 shares at 3%. So if we end up running up further, I will just end up selling at a little bit higher rate depending on whenever it pulls back. And then I will assess from there, and maybe I'll sell some more shares. I do anticipate a pullback at some point. Don't know how high we're going to go before that happens. So if we continue to run, I will just be able to make more money. And then on the next pullback, I will be able to buy in a little bit lower and add some more shares to my portfolio. So again, that's not financial advice. This is just my strategy that I am doing with this today. And again, I'm enjoying this ride, loving this run up this morning. So again, these quarterly earnings to me are really just the stepping stones to give me guidance to say, hey, are we still moving in the direction that we need to be moving for my future investment? And we certainly are based upon these numbers we got yesterday. And so this to me tells me that long term, we are still on the right path. So you guys let me know how you feel about these earnings in the comments below. Otherwise, thank you so much for watching. Thank you guys for whoever was able to join us last night on the live streams, and we will see you in the next one.